Hello, everyone. Welcome back. This is Chandler in Palo Alto, still in shelter in place.
And hello, this is Arne, also at home, trying to move as little as possible.
Well, you can move within the house, Arne.
Yes, but outside, both picking up the virus for myself and also spreading it in the worst case to others.
Yeah. So today we thought we'd talk about, what the world after coronavirus is contained. What are the opportunities for startups, funding environment? What changes we see are temporary, and what changes we see are permanent? So this is more, you can say, positive look perspective on the situation. I know we will get out of this, but how do you prepare that when you're out of it, you can, um, you're ready to take advantage of the rebound in economy or things getting back to normal. Yeah. So we structured the talk today. Well, we don't do much structuring. It's more free-flowing conversation. But before we start recording, we do talk about the topic and how should we, segment the discussion. So today the segmentation is we'll talk about macro coronavirus-related things. Then we'll talk about the funding for startups during and after coronavirus, and then the temporary changes we see in the startup land or consumer behavior, and then the permanent changes we see because of coronavirus. So let's get started with macro. So Arne, since you are a VC, you have a macro view. Why don't you give us the macro view of coronavirus related activity?
Yeah, so I mean, the very short term, just to cover that, is that it's not good. And that means that there are interventions in place in most parts of the world, which essentially slows down, the economy. And that's bad in the short term for sure. And numbers are that like economic activity will be down by 20%, maybe a reduction of GDP by 25% in Q2. So that's a really, really bad quarter.
By Q3 means second quarter, so that's April to June.
Exactly. So that's bad, and that's obviously, a lot of it is people don't travel, people don't stay in hotel, a lot of the obvious things that we see. So that's like this short term thing. I think the key question is how long will it go on? Is this something it will be here for a few months and then it will be gone? Is it sort of intermediate, sort of slow normalization over the second half, or is this something that's going to drag on with interventions for the rest of the year into next year, worst case a year or longer? And I think that if you look at sort of the forecasts that have this view here, is that Q1 and Q2 of this year is impacted, and then it starts normalizing for the rest of the year, but it doesn't get back to normal until we're not back to last end of 2019, even at the end of 2020. That's like the current best estimates from like Goldman Sachs and JP Morgan and this sort of thing. The really interesting thing is if it drags on for very longer, it gets even worse. And I think if we then think about, well, what does it look afterwards? I think which of those scenarios we're in impacts it a lot. I think the longer it drags on, the more different the post-corona world will look than what the world was before corona, essentially. I think that's my like key takeaway. Length of interventions or restrictions is key. Simple as that.
So let's elaborate on that. Let's say, well, I hope it doesn't happen, and it is the low likelihood scenario. Let's say this lasts year and a half. So how will the world change? You said then, like how will the new normal be different than the current normal? Not
Well,
the normal, but the last year normal.
well, one the one is that we'd be in a deep recession. So economic spending power overall will be hurt. Unemployment will be really, really high. All these sorts of things that has multiplier effects, as they call it in the economy, and everything will essentially be bad. That's the one thing about it. But the other thing about it is that essentially that gives people like 12, 18 months, whatever, to change habits. And the longer they retain new habits, the more likely it is that they will stick with it for the long term, and that people will find better solutions for the new habits over that time period.
Like what? Give me an example. What habit might change in 18 months?
Well, so like say you're in a business, and today you would go and visit or before Corona you would go and meet customers, right? Today you are less likely to do so. You're more likely to talk with them on video conference, right?
Mm-hmm.
And today people, that's new to people, but people are maybe surprised at how productive that is. And I think one scenario is that over an 18-month span, people get better at it and more productive at it. So they actually find out, well, we can achieve so much. It's the rare occasion we need to go and visit customers. And the customer is used to dealing with suppliers that way, right? As well as over an 18-month period, people will come up with solutions to make that even more so productive, right? So the likelihood that you on frequent occasions will go and visit customers will go down significantly, I think, in that scenario.
Okay. Yeah, we'll see. Okay. So I always have tough time talking about things where I don't have first-hand experience. So this is all, I think both of us are sharing our opinions, views, but we don't have first-hand experience in dealing with, pandemics or forecasting macroeconomic outcomes. But what Arne discussed, it's agreed upon by major investment banks, and also it kind of is logical based on what we're seeing. This is what's possible. So like Arne said, there are 3 scenarios possible. We come out of it in next 3 to 4 months. So by, let's say, after summer, August, September, things are fine. Or it might take longer. So we come out of it December, January. And third scenario is it takes 18 months, 2 years or longer. Then the habits might change, and that'll have a much lasting impact if compared to if we get out of it, let's say, in 2020.
Right. To be honest, I think habits will change even for the short period scenario. I just think the habit changes and the economic preconditions are just much bigger the longer it stays.
Yeah, so we'll talk about that in temporary versus permanent. What habits do we see are temporary change, and what might be permanent? We don't know, but we will discuss that. Yeah.
Yep.
Okay, so let's talk about the funding market. So now, given these are the 3 scenarios, how for the startups who are in the middle of raising money, who were planning to raise money, and for people who are thinking of doing a startup, what does this mean?
Yeah, so today's topic is post-Corona world, right? But I think we should even say a few words about during Corona world, which is much more obvious, and it's a very interesting discussion what happens afterwards. But I think so if we talk about what's happening now, well, clearly the market is tough for raising money out there. There's no question about it. There's a lot of VCs and so forth that say it's business as usual, but that is the exception, not the norm. It's a tough market out there. So there are less deals being done, and the price is generally lower. I think that's given. There are investors who are leaving the market. So typically those investors who have multiple activities. So that could be typically what happens in a downturn. The corporate VCs leave, family offices, hedge funds, and these sorts of players. All sorts of private investors tend to leave because they can choose to spend their money in other segments of the market. So there's definitely a shakeout of the type of players, and because the funding market is difficult, there are going to be casualties. There's no question about that, and also so casualties means that there will be less startups there. And the startups also will see lower growth. So that's sort of what we expect will happen. Mm-hmm. Now, another thing that's the fact out there is that there's a lot of, in the VC space, there are a lot of funds with pretty big bank accounts. So also what's sort of a given is that for those who actually invest through a downturn and invest in the right companies, that will be some of the best investments during any cycle. And that's historically proven. So I think all of these are facts, but what's kind of interesting, which relates to what happens when it's over, it depends once again about when it is and how it looks then. So I think I think there's a scenario where investors invest fairly slowly during this crisis, but there's a lot of casualties along the way. And that means that you come out of the crisis potentially with pretty liquid funding ability, yet with fewer companies and probably the better companies left. And so you have this question of what is really the supply and demand coming out of it when it loosens up again. And there's every scenario from we're seeing like a slow rebound where the market gradually builds back up, more funding and higher prices gradually. But there's also this possibility of an overshoot. Suddenly, capital will deploy. There are the few companies that have come through it have proven themselves to be very worthy, have performed, and suddenly everyone wants to dive into those. So that balance of supply and demand and the timing of it is very interesting. Will it be a slow rebound or an overshoot?
Yeah. I would say companies who survive may just survive because they raised a lot of money and now they can reduce the burn. So it doesn't necessarily mean that you survive and you are a investment worthy startup.
This is true. It's true. It's a little bit random what your timing of your fundraise was before this hit, right? So that's like kind of a random factor. Yeah. But regardless, if you stay through it, you must be doing something right, unless you're just burning through your cash. And the other thing is that there will be relatively fewer companies to compete against. So acquisition costs will go down as the recovery comes. And there's a less competitive space for the funding that's retained in the market. If that is clogged up, the money there. So there are a lot of second and third order effects here that are kind of interesting and are balancing factors.
Yeah. So I don't know, how much of, do you have any data on the money the VCs had raised in the last few years? Basically what we call the dry powder, that's money ready to be invested. Do a lot of VCs have that in this, let's say 2020? All depends, when the funds are raised, how much is spent, and they are harvesting. Or so do you know any numbers?
I'll have to do this anecdotally for the time being, because I don't have the numbers in front of me. But there's been very, very solid fundraising from 2015 through 2019 and even early 2020. Mm-hmm. And as a matter of fact, a lot of the VCs have raised billion-dollar funds to sort of inch their way up to compete against SoftBank. So there are a lot of big funds with lots of money. Of course, it's not evenly distributed, and it's also a little bit random relative to the time of the raising of the fund. But many of the bigger funds have raised money very frequently lately.
Oh, that's good news. Like, so there is money in the market.
There is some money in the market, but it doesn't mean that business is open everywhere for the time being.
Yeah. So if you are a startup, it would be a different problem if basically the VCs did not have money to invest. Then you're in a very bad situation. But now the situation is not so bad. If you're raising money, you know that there is money available. It may be delayed. They may do more due diligence. Your market cap or valuation may be lower, etc. But relatively speaking, it's better situation that there's money in the market than not having money in the market.
Takes longer, the bar is higher, and the price is lower.
Yeah.
And that also means the likelihood is smaller, right? The bar is higher, it means the likelihood is lower.
Yes, but it's still having money in the market is a better situation than not having money in the market.
Absolutely. So it's not a liquidity squeeze in the same sense that it was in, the financial crisis that a lot of people might not even remember anymore.
Yeah, that's actually a good point. A lot of the younger entrepreneurs who started or came out of school after 2009, or they haven't seen a downturn.
That is correct.
Yeah. Okay, so shall we get into temporary changes? So I think we'll go back and forth. We made a list of what we see happening.
Yep.
So we'll just go one by one. I think it should be pretty quick. So the first one is more respirators.
Or ventilators, I guess they're called in.
No, they're two different devices. So they're both respirators and ventilators in the market. So I think Tesla made 1,000 of them, and every GM is trying to make them. So I think coronavirus is more, the deaths are usually or generally the cause or are caused by lack of healthcare infrastructure than by the actual virus is not as deadly. If you can get these things, then people can be saved. It's just the system is not built for that much supply or treat that many people in ICUs. So we'll see more and more of them in the next few months.
Yeah, so there's never been a demand for ventilators. The English fails me here whether they're called ventilators or respirators, but
Okay.
there's never been a market like this for these. And the fear is that the supply will not come there in time, but the demand is endless these days, and it's hard to see that demand will ever surpass whatever supply there will be now.
Yeah, and I think there will be a step change. Hospitals would want to keep a bigger supply after this has happened.
Absolutely, but they're also not disposable units. So once you fulfill this extreme capacity need now, it's hard to see that it's an ongoing market to double up the next few years.
Yeah. Okay, you go next.
All right, yeah, so more streaming. People are spending more time indoors with their family instead of being out playing sports or going to the pub or whatever. So streaming, Netflix, traffic's through the roof, as well as other streaming services. So this is definitely peaking now.
Yeah, and I read that EU asked Netflix to stream in SD and not HD because the infrastructure cannot handle, the European internet infrastructure cannot handle that much traffic.
This is true, although the telco operators here say that that's not needed, because they claim that obviously the streaming has increased, but it has increased over the 24 hours cycle, where the streaming level was already high and peak hours in the evening.
Yeah. Okay, next is more gaming. So people are staying home, so they're playing more games. That makes sense.
Yeah, very similar to the streaming. Yeah, more essential item shopping. So food, toilet paper, hand sanitizer, all these things that you need are being hoarded even these days.
Yeah. You go even today. Like I went to grocery shop last weekend. Like toilet paper, paper napkins, or uh, paper towels, hand sanitizer. They're still not in stock. And if you go to Amazon, they're not in stock. And if you order like a normal, let's say I wanted to buy a book yesterday, and the earliest delivery is April 22nd.
Yeah. Have you seen any, you know, I know how the market in the Bay Area works. Have you seen any of those niche finer items like a artisan mezcal cucumber margarita hand sanitizer, any of those things pop up yet? Or
No, I haven't seen it, but I read that a lot of the distilleries are switching to making hand sanitizer. So they may come out with that in the next few weeks.
I'm looking forward to snobby hand sanitizers. I think that's a missing item.
Then next is increased remote tech. So that's more use of Zoom, Slack, Microsoft Teams, Office 365, etc. So that we are saying, we are doing it every day. I'm on Slack all day, Zoom all day since I'm working from home. And I think most people are seeing that. And I think the usage, Zoom doesn't declare that publicly, but they said the usage is almost double of normal or something like that. I don't remember the exact numbers. And did you see my song? I wrote a song, Hotel Corona, on how life is now that we are working from home.
Yeah, so this is a trend, I think, like cool music, you know, well-known songs with a Corona theme is popping up everywhere, and a lot of music videos. And I will congratulate you on your great Hotel California ripoff, but I do wish to see the music video for that. And I think that trend is a good one. Whether it's a temporary change, I don't know, but I like it.
Good. Okay, next is your.
Yeah, so more cloud usage. I think, you know, this cloud is sort of the infrastructure for a number of things that we've already talked about, like streaming, gaming, remote tech, and so forth, and pretty much all the things that makes people productive when they have to be distributed, runs on the cloud. Mm-hmm. So the cloud benefits essentially.
Yeah. Next is more delivery services. So that's also obvious because we cannot go out, we get delivery at home. So there's more usage of, Uber Eats, Instacart. I magically, I remember my password from Instacart. I'm always trying new apps. When it came out almost 10 years ago, or I don't know when, but I still remember the password. That's the magical part. So I looked, my last order was 7 years ago on Instacart. So I ordered something again because it's harder to go out. So that's all happening, more delivery services. A lot of the restaurant here are delivering. So if you walk around Palo Alto, they're closed, but kitchen is open. So they have signs, order through DoorDash, Uber Eats, etc. for delivery.
Yep, same everywhere. And more social media usage. People are bored. They try to stay connected with friends. and to spend their time, and social media usage is simply up as a result of that.
Yeah, I saw on TV that in Italy it was 70% higher on Facebook usage. All the, I guess, in panic or work from home, all the privacy concerns and everything's out the window. People are on social media all the time.
Yep.
Okay, next is less travel. Of course, I mean, I don't think we have to say much here.
It's forbidden essentially, and it doesn't run.
Yeah.
Less retail, and here we're talking about sort of brick and mortars retail. Restaurants, bars, cafe, shops, to some extent, are closed.
Mm-hmm. Yeah. The next is less events, meaning that's also obvious. The MWC is canceled, G7 summit is virtual, South by Southwest, Olympics are canceled. Of course, all the events, because we are maintaining social distance, you can't really have events.
Exactly. Next one, and this is to the grief of 80% of the Norwegian population, oil prices are lower. With 20% of the population in Norway that likes it, puts the climate above economic growth, which is a fair point, but it hits the Norwegian economy certainly very hard, because it's the main driver of income to the economy, which means that the stock market is down, the kroner is terrible, so all goods from foreign countries are more expensive as an effect of the oil prices just going down. And the oil price is going down essentially because fewer cars are driving, fewer buses, fewer planes. Economic activity that relates to physical movement is simply lower, and less oil is being used. And in addition to that, then the supply and demand is going off because Saudi Arabia and Russia cannot agree on the quotas.
Yeah, so they're producing oil at all-time high levels. So I think that's more to do with the prices than the demand, because it takes time. There's a lag between that.
Yeah, but the market price moves very quickly because there are a lot of people with intelligence of what the stock is and what the consumption is, and so the price movement moves much before like the actual movement of when the stock has been used and all that sort of thing.
Mm-hmm. Okay, next is less focus on growth. So now companies are more focused on cash flow, profitability. They're like, especially in the valley, it's been all about growth. There are different words used, exponential growth, blitz growth, or I don't know. But now nobody's talking about that. Everybody's focused on cash flow and profitability.
Yeah, so the reality, I guess, on this one is that there is just an understanding that more, when crisis hit, people cut costs rather than try to build something or buy something new. So it's just harder to get new customers, and that will hit growth even if you focus on it. So it's more about retaining the customers you have and living off that. And that's also where, the flip side of that is to focus on the cash flow.
Yeah. So that was the next one, more focus on cash flow.
Yep.
Then next is less advertising. So because, people are basically not buying things. So you don't have to advertise as much. So we will see that in Google and Facebook numbers, which is a lot of the digital ads. So
Facebook actually announced yesterday that advertising revenue was down.
Yeah, so that's, we are seeing that, like all these, things, a lot of things are closed. Travel industry, which is more than 10% of the ad spend, is not advertising. So just that is big, and people are not, the non-essential shopping mood. They're at home, kind of anxious about what's happening.
Yeah, I think it's being picked up by some of the more sort of e-commerce and media content and these sort of, streaming and gaming and these sort of ad revenue there, because they understand that people are going to spend money on that, but that's clearly not enough to keep the level the same.
Yeah.
All right, next one, less real estate sales and even viewings. It's very central to real estate deals that people can look at the property, and even that is hard in this market. So this is just an effect of restrictions on movement and just a lower level of economic activity and also uncertainty in the market.
Yeah. Next is less hiring. So because companies are not growing, they don't need as many people. And then, you can't, generally, if you want to hire somebody you want to work with every day, you want to meet with them in person, which you cannot do now because of the shelter-in-place restrictions, etc. So that even if you are hiring somebody that is not for growing, but just a replacement to keep things going, it's hard to do because you cannot interview people in person.
Yeah, and the flip side of that is actually lots of layoffs. The spike in unemployment, both in Europe and the US, is like the biggest seen since the Great Depression in the 1930s.
Oh yeah.
So some of this is like most likely temporary because it comes out of industries that are sort of essentially by government decrees stopped from operating. And if it's a quick recovery, a lot of this will come back. But in a slow recovery, this is one of the biggest problems with this slowdown.
Yeah.
Okay, next one, no IPOs. Essentially, the market is not open for IPOs. You can't do the roadshow. There's lots of turmoil in the market, so investors have more than enough time looking after their existing portfolios and figure out how to reallocate them in a turbulent market and not listen to virtual roadshows. And also, it's not good to go out in the market with this sort of turbulence because it becomes very unpredictable.
Yeah, you saw so in total, we discussed 18 trends we are seeing. 17 of them were relative, less or more. This one is absolute, no IPO. But I would say, I can only speak from the tech startup, perspective. Maybe there's some like I don't know, seed corn company or something going public, which I don't know about. But the tech IPOs are not happening.
Right.
Okay, now we get to more fun part, permanent changes, which, we don't know if they will happen or not. So we will see if Arne and I have different opinion on these. But this will be the one where there may be opportunity for startups. If there are permanent changes in how society works, consumers behave, then of course, change always creates opportunity for startups. Okay, so let me start. First one is more contingency planning. So a lot of companies have never seen anything like this, and now they're seeing this. I think there will be more scenario planning or contingency planning, cash reserved, or, and not like the dividends or buybacks might slow down. Because all the kind of things that the airlines, for example, are being bailed out, but they were buying back stocks. All that cash could have been kept for a rainy day. So now I think people will do that. Now they see what's possible.
So I think you're right, but I'm sort of a pessimist when it comes to this, because. So I think you start planning for the scenario, and try to say, well, what if the coronavirus hits us again? We'll have more ventilators and we'll have procedures for it and that sort of thing. But there's been crises before. So I'm sure that if the SARS virus hit us again, we would have the stock of Tamiflu that would save us. but we didn't plan for a pandemic. We planned for SARS. And so the contingency planning tends to sort of plan for the scenario we know, but not the one we don't expect. And the measures for it don't tend to be the right ones for whatever unexpected is to happen. And also, like post the financial crisis, they've sort of had all these sort of regulations and red tape into place, and it stops that scenario. But it essentially have with increased buffers and whatnot. It's created lots of red tape, but it doesn't actually help for the actual scenario that's happening. So this is the whole idea of the black swan, and the famous book around the black swan. And I think there will be more contingency planning, but I'm not counting on the new contingency planning to save the next event.
So I would say, the financial crisis in 2007-8 did enforce, higher capital requirements on banks, and that is helping now. Like, they're in very good shape. They don't have to borrow money even if the loans default. So they have a lot of cash to survive this. If they had not done that, then the banks would be in trouble again.
Yeah.
And now, let's say I am running Southwest Airline and I bought shares back because I didn't know what else to do with the cash. So once I go through this, I would save cash for a rainy day, for something unknown. And I wouldn't call this a black swan. Like, this has happened before, and there were warnings. Bill Gates gave a TED talk in 2015, and a lot of smart people warned that this might happen soon. Not soon, but in near future. So it wasn't as unexpected if you were paying attention.
No, it's not unexpected, but you don't know that. So I will give you that if all businesses have lots of cash on hand that you don't normally need, they will be more resistant to any crisis. I will give you that. Mm-hmm. It's a question, is that efficient? And I think there's sort of a balancing point between resilience and efficiency. Yep. And so particularly when it comes to the cash buffer, I think you're right. I think all the other things that you put into place don't tend to necessarily fit what's coming, right? Because I think there could probably be procedures in place to stop the spread quicker than this time. I think if you had listened to Bill Gates and the likes, you probably could have stopped the spread before. But whether the next virus kills your lungs, you need more ventilators, or it makes your nose fall off and you need nose holders, you don't know. And these are the things that people don't manage to plan for, because it tends to be a black swan that you don't really see coming. And so you can mitigate some of it, but there's also some event or some element to it that's just completely new.
Yeah, but the point is, like, if I don't know if it will happen, but the companies should keep more cash in reserve for an unknown event or unexpected event or black swan or something that we don't know that might happen. But we'll see if they do or not.
Yeah, my point is that human contingency planning tends to be for specific scenarios that you understand, and not for the unexpected. And that's why I think you will see it, but it will only be partially effective to whatever comes in 5 years or 10 years or whatever.
Yeah, okay. Next.
Yeah, so more acceptance of remote work. And I guess I alluded to this a little bit before, where I think that, a little bit of a reason why remote work hasn't been implemented before is that there's some sort of friction to change in general. Whilst remote work actually has tools and it has been possible to be productive that way before. And I've actually even invested in 2 portfolio companies over the last 3 years that are truly remote first companies with people around the world. So I think a lot of people who are used to working in a more traditional sense and now start to work remote actually realize that this is actually more productive than they thought. And certainly if it's well organized for that purpose, it can be. I think there are some friction points now in that, in some places like in Norway, kids are home from school and preschool and all that. So that sort of can get in the way. But the remote work experience itself is actually, for a lot of people, quite effective. So I think that is sort of the genie is a little bit out of the bottle on this one, and I don't think it's completely coming back in the bottle.
Yeah. At least in the Bay Area, I think a lot of people like the lack of commute. So, like most people spend almost 2 hours just commuting to work. So you can save that time just by not commuting.
Exactly. It's the same thing in New York or in London as well, and lots of other metropolitans.
Okay, third is more acceptance of remote health. And there are many names for this, telemedicine or virtual medicine, virtual health. But basically the idea is you don't have to go to the doctor. The doctor can, treat you remotely. In the last episode we talked about, it has two parts. That one is diagnostics and another is care, which is mainly for older people. So with coronavirus, and the not regulatory changes, but the government, at least in the US, is making possible now to do this. They refer to it as telemedicine. But with the wearables we have in place today, getting the vitals from people is possible. So I think we'll see more and more of this, not only the physical health, but also mental health. So remote therapy or just the doctors figuring out what are the symptoms or sequencing it. This meaning, okay, this is something we don't understand, so come in. Yeah, this is like an obvious case of, you have normal flu or just a cough or whatever.
Yeah, it has both the sense, you can both do the consultation and you can also get vitals, as you said.
Yeah.
And I think in the current situation, it's even so that it's better if the patients don't come in.
Exactly.
Yeah. So I fully agree with you on this one.
Okay, next.
Okay, yeah, next one. So more e-commerce. So e-commerce has certainly been on the rise over. I guess e-commerce has been on a roll for like 20 years or something by now, but it's still a relatively small proportion in most countries of overall commerce, except from some categories. And now where it's harder to get to stores, e-commerce is picking up. And growing even faster during this period. So I think the continued growth with the acceleration will stick afterwards.
Yeah. So I think what I would point out here is a lot of people were doing it before. People buy on Amazon and other things, other places. But there was a segment of population who never tried or didn't do it, and they're doing it now. So more people are getting introduced to it who weren't introduced to it before, and that will stick. Yeah, these people will stay online or do e-commerce.
Exactly. So if I can do like a general view of it, and it sort of comes across to all of the things that I think will stick and become permanent changes, and that is that when you you onboard people for remote health, or get people to become customers on e-commerce. There's this thing about you have to acquire the customer, and has a cost, the marketing, the CAC, and you're competing with alternatives, right? And what's happening in this scenario is that the alternatives fall away, and that means that it becomes easier to acquire these customers because they come by themselves almost.
Yeah.
And then they get a taste of the experience and sort of the training of how to do it, and they realize how well it actually works. And obviously some will churn and go back to their previous ways, but fewer will do, and a lot will stick. And I think the interesting thing when it comes to e-commerce is that there's some tipping point in various categories, right? Where e-commerce, so like books and music, I guess music also because of streaming and so forth, but there are a number of categories where like brick and mortar retail is gone. But I think you can reach the tipping point in more categories quicker, and that sort of accelerates the e-commerce side of it with a second order effect as well.
Yep. Yeah. Next is more cash reserves, so which we talked earlier when we were talking about contingency planning. So, well, we don't know if it'll happen, but I hope it does happen. If I'm running a company, I would keep more cash after going through this.
Yep. And so one is more delivery, and delivery is essentially a lot of a function of the rise of e-commerce, but also of the experience around food delivery and all sorts of things that's going on now, right? You sit at home and you realize the convenience of it. And I think this is particularly pronounced here. I experience it even more so in Norway than I did in the US, because the delivery experience with DoorDash and Amazon and so was pretty good. Here, the delivery has been hitchy, I think, but it's like the players here are actually rising to a location, and I think when more people get a taste of that, the delivery and the convenience of it will definitely stick.
Yeah, I mean, just think about it. At least in the Bay Area, 6-7 years ago, the only food delivery you would get was pizza. Somehow, for decades, nobody thought you can deliver everything else also. And then it started with, I think DoorDash was the first one. And then now Uber Eats is big. DoorDash is Caviar. There's so many. So I think more people. Grubhub, yeah. More people will get a taste of it, like we discussed with e-commerce, because you cannot go out, and a lot of people don't like to cook, so they're getting introduced to it and they like the experience. So some of it will continue. Of course, people will go back to restaurants once they open, but sometimes you don't feel like it, and now you can order in because it works.
Yeah, agree. And yeah, so permanent change is one which is related to the e-commerce, right? So you have this brick and mortar retail, and today in the shops, except from the essential items, the shops are somewhere, some of them even closed, but a lot of them don't have much customers in them simply because of social distancing. And just like I've been a big believer in remote work for a number of years, I've been a big believer in e-commerce over brick and mortar retail for a number of years. And I think, this, I think brick and mortar retail has been dying. It's just been a question of when, in many segments. And I think this brick and mortar retail will have a tough time now, and with the shift in market share towards e-commerce, I think it will reach the tipping point with economies of scale, or sort of the overall economics of having a brick and mortar retail store won't make sense anymore. So I think this will be an accelerator for brick and mortar retail dying, and it might even be the final kill in some segments.
Mhm. Yeah, we'll see how long it takes and what the categories are.
Yeah.
Yeah. Anything else you want to add, Arne?
No, I mean, Corona world is a boring place. It's a slightly less boring place when you can sit and think about what does it mean and discuss that future. But of course, there are lots of unknowns in this, but nevertheless, it's interesting to think about it and discussing it, even if some of it is not optimistic for a number of things.
So, yeah, last week we thanked the healthcare workers, and I think this week I want to thank the delivery workers and the people who are working in retail or grocery stores.
Yeah.
They are also risking being sick or being out. Everybody else is practicing social distancing, but they cannot because they want to keep their job. And so thank you to all the workers who are delivering packages, food, etc., and the ones who are working in grocery stores. And I hope everybody is practicing social distancing. It, you know, it is hard, but I think there is no better solution, and it's temporary.
We hope.
Yeah. Okay. Thanks, everybody, for joining us.
Thank you.
Next week, we'll see what the situation is in terms of quarantine. But I hope to see you. Well, we'll see you next week.
All right. Bye-bye.
Thanks. Bye.